What's going on, Moon Gang? I hope that you're having an awesome day. So, if you've been keeping up to date with my videos, there's a pretty good chance that you know I am very bullish on Apple. Fortunately for all of us in the Moon Gang, the good news keeps rolling in. In this video, I will be going over another massive price target upgrade, and after that, I will be doing a technical analysis of Apple stock. I will be mapping out the key levels of support and resistance so we know what price levels to watch over the next few trading days. Before I get into that though, as a quick reminder, don't forget about all that good YouTube stuff. If you enjoyed this video, it would be great if you could drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All that engagement really helps me out. And now, let's get started. As of Wednesday, December 9th, Apple stock has a new bull case price target of $200 per share amid clear uptick in iPhone 12 demand. Wedbush analyst Dan Ives lifted his price target on Apple to $160 per share, the highest on Wall Street, and his bull case target is $200 per share, and of course he has an outperform rating, citing a clear uptick in iPhone demand in both the US and China. Ives said sales of the iPhone 12 could approach the 80 to 85 million unit level by next year, well ahead of its prior forecast of between 65 to 70 million. This was his reasoning. With more order activity kicking in over the last few weeks for the iPhone 12, our initial reads are very bullish and give us incremental confidence in our super cycle thesis on the iPhone 12. We believe pre-orders track more than 2 times its predecessor, the iPhone 11. He continued by saying, "We believe that this will translate into an unprecedented upgrade cycle for Apple with a major holiday season on the horizon." In the last earnings announcement, it was reported that iPhone sales were down, and that's most likely because the iPhone 12 was slightly delayed. That revenue was made up for though by increased sales in Macs, iPads, and wearables. Moving forward, I'm expecting the next earnings announcement to be a complete blowout. Clearly, there is a lot of demand for the iPhone 12, and on top of that, the other sources of revenue are doing very well. I am specifically interested in Apple One, the company's bundled services package. Apple is a premier technology company, and I strongly believe that if you have a long enough time frame, its stock will produce sizable returns. Speaking of which, let's check out the charts. Well, when the market closed for the day, things were not pretty. 3 of the major indices were all down, and in fact, take a look at this. It was just a giant sea of red. Anyway, Apple lost 2% today, which puts its stock at $121. Over the past week, it's down 1%, but all of the other major timeframes are looking pretty good. Here is the current technical situation that Apple is in. It hit its all-time high of 138 in early September, and this came on the back of the company's 4-for-1 stock split, but when that actually went through, there was a pretty brutal sell-off down to 103. From here, the bull camp did come back fighting, and they managed to post a new relative high at 125, but then there was a sell-off down to 107, which did mark a new higher low. From there was a small bounce. Apple was range bound between 116 and 121, and then up until today, the stock was riding this trend line, but now we're seeing a small breakdown. As of now, I'm really not too worried because twice before the stock was able to recapture this trend line. But if this breakdown does hold, it would mark a second rejection at 125. If the bearish momentum continues, support might be found between 118 and 120, and past that we would be looking at 112. From the current level, those would be declines of roughly 3%, and then to get to 112, that would be a drop of 8%. However, if this is simply a bear trap like it was twice before, the first resistance I would watch would come at 125, which would be a gain of 2.8%. Past that, we have the high from late August, which would be 129 and a gain of 5.6%. And then for those of you who are curious, for Apple to get back to its all-time high, it would need to gain 13%. As things currently stand, there really isn't too much going on in the RSI. Moving forward, I'll be looking for one of 2 things to happen. I'll be looking for Apple to get right back up into this wedge, or I'll be looking for a bounce off of one of these supports and then a return to the wedge. But to get a better idea of what might happen in the immediate future, let's see what's going on in the 4-hour time frame. Before I jump into this time frame, I wanted to quickly mention that the name of this charting software is TradingView, and for those of you who are interested, there's a link to a free 30-day trial in the description of this video. If you sign up, it is a great way to support this channel. Anyway, back to Apple. For pretty much all of September and October, Apple stock was consolidating. It went from a bull flag to a bear flag back to a bull flag, then it became range bound between 116 and 121, and most recently, it's been battling it out at this region of resistance, namely 124, and now it looks like it was rejected. Right now, Apple stock is at 121, which happens to be previous support and resistance. If the bears push Apple below that, I would then watch 118-ish, and past that, I would be watching 112. If Apple were to return to this bottom price level, you can bet that I would be loading up on more shares of the company. Now, I'm in no way saying that this has to happen. In fact, I think there's a better chance of Apple bouncing somewhere up here, but I would like to bring your attention to these two key points. As you can see, between December 1st and December 9th, Apple stock managed to hit a new relative high, but the RSI didn't. This is referred to as bearish divergence, and it's commonly a sign that the stock is about to drop or at least consolidate, and that's what we're seeing right now. Granted, after today's action, the RSI has cooled off quite a bit, so this could definitely be the end of it, but I would recommend paying attention to the overall market because there's a very good chance that if that drops, it will drag Apple with it. On more of a personal note, I am invested in Apple and my cost basis is right around 117, and on top of that, I own call options on this stock with a strike price of 125 and an expiration date of December 18th. In terms of the Apple shares that I own, I am a long-term investor, so I don't plan on selling them anytime soon. But in terms of the option contracts, I'm really starting to wonder if I should have sold them early this morning because today played out in a pretty brutal manner. All in all, I'm still a long-term bull on Apple. In fact, I think the stock will be much higher years down the road. In the short term though, I'm looking for Apple stock to stay above 118 and definitely stay above 112. As things continue to develop both fundamentally and technically with Apple, I'll make sure to keep you updated in future videos and also keep you posted on how my options play works out, so make sure you have your notifications turned on. I would love to know your thoughts on Apple in a comment below. Where do you think the stock will go between now and the end of the year? And if you have any questions, I would be more than happy to answer them in future videos, so feel free to post those as well. If you enjoyed this video, it would be great if you could drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All of your support is truly appreciated. And if you're new to trading, or if you're simply looking for a new trading account, there's a link to the Webull trading platform in the description of this video. The company is currently running a promotional deal where if you sign up and make a deposit of $100, you'll be awarded 4 free stocks, so it's definitely worthwhile to check out. Thanks for watching, and until next time, best of luck in the markets.